In today's lesson, we're going to talk about Forex currency pairs. So when you trade Forex, you're simultaneously buying one currency and selling another. This is done in pairs. So here's an example of what a currency pair looks like. We're going to use the Euro-US dollar currency pair. So let's take a look at the left side. This is what we call the base currency. And the base currency is always first and has a value of 1. Now let's take a look at the right side. The right side's called the quote currency, and the quote currency is always second and fluctuates based on the exchange rate. So let's look at an example of this. So it works like this. On the left side we've got the euro. Remember, that is the base currency and has a value of 1. So that's 1 euro. Now if we were to look to the right side, this is our quote currency. And this depends on the exchange rate, and this goes up and down every day. But for this example, we're going to say that the US dollar, in comparison to the base currency, the euro, is worth 0.89146 or 89 cents. The quote currency is always quoted in decimals, and this goes up and down, and this is where Forex trading happens. So when you look at a currency pair, you always note that the left side is your base and the right side is your quote currency. So the right side is the one that goes up, goes down. So what happens if the US dollar gets stronger? The currency pair stays the same. It's still the euro-US dollar, it just happens that the dollar is stronger. So now you know how to look at a currency pair, that the left side's always the base currency, value of 1, and the right side is always the quote currency, and that goes up and down. So the most commonly traded pairs are called the majors. Remember in the last lesson we learned about the majors? Well, these are the major pairs. And you'll notice something that's common with every single one of these major pairs. And that's that the US dollar is always a currency in one of the major pairs. So if you see a pair that has the US dollar in it, you know that it's one of the majors. And the majors are really popular because they make up about 85% of the Forex market. So there's a lot of liquidity, there's a lot of room to make money using just the majors. So this simplifies the Forex market if you were just to learn the majors. But we're going to talk about two other types of commonly traded pairs as well. So cross-currency pairs do not contain the US dollar. So if you see these type of pairs, you notice that they're all in the majors, but they don't have the dollar in it. So this is what we call a cross-currency pair. And lastly, we're going to talk about exotic pairs, where they contain one major currency and one emerging currency. So for example, we've got US dollar and the Turkish lira, or the US dollar and the South African rand. And obviously, if they're emerging currencies, the list could go on. So now you know about Forex currency pairs. You know about the major pairs that contain the US dollar. You know about the cross-currency pairs that are majors without the US dollar. And lastly, the exotic pairs, which are one major currency with one emerging currency. Okay, now you've got the Forex currency pairs down. I'll see you in the next lesson.